Welcome. Good afternoon, good morning, good evening, wherever you are. So welcome to this event on climate innovation for impact investors, hosted by CDC Group and the GIN, the Global Impact Investor Network. So I think, as we all know, the climate crisis is the biggest challenge that we are facing humanity and the future of our ability to thrive on this planet. And every day, the urgency is growing, as the recent IPCC report made clear that the devastating consequences for slow progress towards limiting climate beyond to below 1.5 degrees would actually have devastating impacts on many parts of the global population, and in particular, the most vulnerable and exposed populations in developing countries and the less developed countries where it is particularly acute. Now, much of the conversation has focused on policy on the one hand and finance on the other as two key tools to address the climate crisis. However, the private sector also has a critical role beyond finance, particularly the innovation and the that businesses can bring, and the ability to be able to harness this innovation and entrepreneurship in a way that can bring the necessary solutions to tackle the climate emergency. We're already seeing many businesses innovating in different ways, whether that's developing or scaling technologies, incorporating low carbon solutions into existing businesses, or creating new sustainable business models that can address very specific customer and market needs. But it's critical that this needs to happen now on a much larger scale and be replicated across all countries and all communities in all countries. So today we're going to explore what is the role of investors like CDC and other investors, particularly those in the Global Impact Investors Network, what is our role in helping to support these innovation, these technologies, these new businesses that are going to be needed for countries, for sectors and communities to decarbonize, but also critically become much more resilient to climate impacts. So delighted that you are joining us for this conversation, which will have a very practical focus. We have some practitioners who are all innovating and or financing innovation, and we'll be exploring the market needs to identify some of the gaps that may be hindering investment for what may be potentially game-changing businesses, and look at what can be done to accelerate and scale viable solutions that are compatible with keeping warming to below 1.5 degrees, as well as increasing resiliency to climate impacts that we know are already inevitable. So now I'm delighted that our co-host, Amit, of the Global Impact Investors Network, and Peter Van Damsgaard will talk through some of the challenges and issues before we get to the panel discussion. Thank you.
Thank you so much. And I want to give a special thanks to our partners at the CDC, the speakers who are part of this event today, and our global virtual audience who's joining us for this important conversation. This is an incredibly important time to be having this conversation. We see a lot of attention focused around the COP meetings around the climate crisis, and it's incredibly important that the world's leaders from all walks of life are coming together to really think about how we can accelerate progress towards a more sustainable future. We've seen lots of leadership from governments, from private sector, from civil society, but we also know that everything that's been done today has not been enough. Our progress has been insufficient, and we need to figure out how we can actually accelerate and expand everything that we're doing to help mitigate the climate crisis that is increasingly having visceral effects for people all over the world. And one thing that's clear is that when it comes to addressing the climate crisis, we cannot afford for investment capital to underperform. We know that we cannot have the sustainable future we need, an inclusive society and economy that lives in harmony with a healthy planet, without changing the way that the world invests. And that is the focus of this event. And to kick it off, I'm incredibly honored to be speaking with Peter Damgaard Jansen. We first met a few years back when he was the CEO of PKA, a Danish pension fund that had been doing a lot of work and investing in climate infrastructure. He is now serving as the co-chair of the Climate Investment Coalition and the chair of AIP Investment Management. Peter, welcome to this conversation, and thank you for joining us.
Thank you very much. I'm glad to be here.
Well, and Peter, you've been leading the charge on climate for institutional investors for at least the last decade. Can you tell us more about your work over this time and just share your reflections on the progress that's been made?
Yeah, if I go back 10 years when I was the CEO of PKA, we did our first large investment in the green area. And if I look at the market at that point of time, it was only a few other pension funds and asset managers that actually was active then. Then something happened, especially after Paris, and some more pension funds and asset managers joined. But I would say it's mostly during the last 2 or 3 years we really have seen the drive that more and more institutional investors are coming into the market. So investing green is still quite a new industry, you could say.
When you think about what the world needs from institutional investors to address the climate crisis, what do you think that should look like? Obviously, it's in motion as we speak, but when we get to that kind of sustainable end state, what would an institutional investor portfolio and role look like?
I think it would look like that you have made up your view on how you're going to invest green in all the asset classes you're investing in. And you would also have an active dialogue with the companies you have invested in. And then, least but not last, last but not least, you have taken your whole strategy, your whole investment strategy, and looked into that with a green lens. And that would really take a lot of job to do that, because this is not going to be easy. But I know a lot of pension funds and asset managers, they are on that journey now.
And can you speak a little bit about that state of progress? I think one thing that we've seen with impact investing broadly, and certainly with climate investing as well, is that it often starts as like an allocation, or kind of a pool of funds that will be applied in a certain way, but over time actually moves to be the center, like a lens, if you will, for the entire investment strategy, where kind of institutional goals are set, incorporating impact or climate targets. How do you see where we are today in that migration?
I would say that we are still at a point where a lot of institutional investors have started with 1 or 2 asset classes and are working on how they would really go green in those asset classes. It could be renewables, green renewables. It could be green bonds, and it could also be responsible or green investing in real estate. A few ones have been spreading that to more asset classes, and very few actually have been working and got the work done on a whole strategy that would lead to carbon neutrality at least before 2050, but also have a strategy on what's going to happen now and what's going to happen next.
That really resonates, and I think one of the key issues, of course, is how does this investment land in emerging markets? What type of activity do we see there when it comes to mitigating the climate crisis? I was just recently actually in Singapore for an event that Temasek hosts called Ecosperity, where they had convened a global audience, but certainly with heavy emphasis in that region of Southeast Asia, to talk about these issues about the climate crisis and also the need to help and invest in nature. And of course, there's this is an intense time, where they see that very powerful effects for island nations in particular, and those with coastline, but certainly for supply chains and other issues. And there's insufficient capital flowing to emerging markets to address the climate crisis. Can you talk specifically about where you see institutional investors playing a role in emerging markets when it comes to climate investing?
Yeah, emerging world and investing, climate investing there is clearly one of the areas where we have to do much more, also from the private sector. And the private sector is needed there, first of all, because there's a lot of money that will be able to invest there. Secondly, because we have seen in the developed world when the institutional investors join, that this also give a new dynamic to the markets and actually can free the public from some of the investments that should be that shouldn't be on those books. But I still think that a lot of investors, first of all, in general, they do not invest a lot in emerging markets. So in general, they're not very used to these markets. And secondly, I think for the moment, many of them think the risk is too high in those markets. So we really have something to do, but both from the emerging market, the governments, and also the different international institutions, but certainly also from the investor side.
And I want to pick up on that last point, because I know you have experience with this from your work at PKA, and imagine from other roles that you've had as well. But obviously the public sector and public finance can play a key role in helping to de-risk some of these investment opportunities, to help put incentives in place, and ideally to hope to accelerate investment from private finance into emerging markets. Can you speak a little bit to where you see the opportunities and challenges with that? Some call it blended finance, others call it catalytic capital, but basically the ways that governments can help accelerate the flow of capital.
The governments have a big role, and both the governments in the developed market and in emerging market. In the developed market, as you said, they could try to help by different kinds of blended model to bring down the risk, but also by joining the institutional investors, because I mean this is really new markets, markets that many institutional investors don't know, but many governments have through their diplomatic representation or different kind of public banks, an opportunity to go in and help the investors to learn more about the markets. And maybe also when there's problems, use the diplomacy to help on that. I also think there's a lot of things to be done by the government in the developing markets. First of all, to have some clear and ambitious NDCs and some clear planning for what's going to happen, because the projects actually starts often with the government or local government in those markets. And then by having a stable and clear investment signals as possible, there's nothing like changing environment that institutional investors don't like. So there is still a lot of work to be done. But I think actually that I can see that some countries are on that travel in the developing world. And I hope that we will see more examples, because that would be the really big breakthrough, to have some very good examples where you start to see the returns come back and see that these projects are truly green. Investors move a little bit like a herd. So when somebody in the front are doing good, then they tend to look in that direction.
That absolutely resonates, and I think one thing that is also on our mind always at the Global Impact Investing Network is this issue around measurement and how we understand kind of the impact that we're all having, and how, of course, to drive for greater impact. This is also a time that we're having this discussion against a backdrop of growing distrust in institutions, governments, the private sector, and also even this NGOs and media. And one of the things that's so important, we always see a lot of skepticism, talks of greenwashing or impact washing or SDG washing. My hope is that we can actually focus on real results and clear and transparent data to understand those results. And we're increasingly, from our perspective, hearing a lot of demand for this from institutional investors and mainstream asset managers and others. From your experience, the institutional investors that you work with, where do you see the role of data to better understand climate impact? How does that fit into the way you see the market evolving?
I mean, data for investors is crucial. It's so big a part of our industry, both when we analyze where we are going to put our investments, but also when we analyze what's the results, and when we talk about green investments. I mean, we have this double bottom line. It's both a question about having returns, but it's also a question about being able to say that this is truly a green investment. And there we are at a different or a difficult position, because we don't have the data really, especially about the greening part, but also we don't have a clear definition on how this data actually should be rubricated. We have different works on that in Europe. We have the EU taxonomy. I know also that some of the big auditors are working on this, but really for the moment we don't have a clear picture, and because of that we also risk some greenwashing, because maybe some of the investors are not really clear on what they are in what area and how what the data is going to be around their investments. So I think at least in the next 2 or 3 years we have to live with that. In some cases investment wasn't as climate friendly as we have thought, but we really have to do the work, and that's both the investors but certainly also some of the other institutions working in this area. And I think really this is an area where we have to cooperate. I mean, this is not an area where we should compete with each other. We can compete on the results, but having a common understanding on this is so important for both the industry and the public.
Yeah, and I think it's it's definitely like a very critical issue, and I think we're very at the GIN we work with the CDC and actually many of our participants here today on these important questions around measurement. But this is something I think increasingly we'll be working on with institutional investors as they start to try to address some of the questions that you raised. I also want to talk about, when we, this notion of like a systemic crisis requires a systemic response. And we obviously need kind of every sector of society and our economy to be operating differently to truly, move the needle when it comes to climate change. One of the things that we see a lot of attention on is how do we decarbonize supply chains and kind of historic, activities? How do we reduce consumption and things? But there's also a very critical need for innovation. We need technology-based innovation in all kinds of ways, and we also need innovation in business models that better support kind of nature-based solutions, things like sustainable forestry and agriculture and other ways that we can support marine life and life on land. How do you see the role of institutional investors in getting more capital to innovation when it comes to climate solutions?
We clearly have our role to play because the need is so big, and there's not just a question about finding the right investments, but it's also a question about the timing. We can see that some of the technologies that's mature today, like wind and solar, really have taken 20 to 30 years to reach that stage. And the world don't have that time. Hopefully in 10 years, we should have some of the new technologies we need. And I agree with you that it's not just a question of mitigation, but also about adaptation. So also there, we really have some work to be done. I see it as a point where also public and private can work more closely together, because some of these prototype or pilot investments are not return giving yet. So the public still have to do something, universities, the public sector. And then we have to find vehicles on venture investment in clean tech to see how we can develop that. And also, as you said, maybe new kinds of financial, in our financial machinery, we need new instruments to do this. Again, climate adaptation, it's in many cases it's different to find the income stream that we should have as investors, but it's so clear that we need some solutions, also nature-based solutions. And I hope we will get some projects and ideas, and I think because more and more investors are moving into this area, I also hope we can crowd them in some of these different areas, because it's not where you start. You start in the mitigation area, and you start with green bonds and renewables, because that's something because we have the other kind of bonds, and we also have infrastructure investments. But if we really could speed that up, that would mean enormously for which kind of world we will have in 10 or 15 years.
You know, that absolutely kind of resonates with how we're thinking about it as well at the GIN, because I think we certainly see you know, a need for innovation, and it's a certain type of capital and a certain type of risk tolerance that is required to help develop, whether it's, you know, like true technology innovation, or if it's just innovation in business models and structures, which of course will be critical to helping to fill some of these gaps between supply and demand. But we also see a need for scale, and those innovations, once proven, need to be taken not just to be kind of scale in a community or scale in a given country, but to global scale. And I think making sure that these different kind of parts of the capital spectrum and different parts of the you know, the way that we actually think about scaling innovation all kind of you know, operate in harmony, I think will be absolutely critical to meeting the 2030 goals. And that's where I want to you know, end this great conversation, is you know, looking forward you know, to the COP meetings, COP26, that'll be taking place in Glasgow imminently. What are your ambitions and hopes for these negotiations? You know, what would success look like, you know, for this, you know, incredibly important meeting that brings together, you know, institutional investors, the private sector more broadly, you know, people from all over the world, government leaders, you know, activists and beyond. What do we need out of this moment and out of these meetings?
First of all, I think this is going to be the most important COP since Paris. That's my feeling. And I really think that both governments and private sector participants need to show the world that we have come a long way since Paris. So we will get some indices, we will get some goals from the private sector that really shows the world is ambitious in this direction. The second thing I think we need, actually from both public and private, is we need the goals for the 2050, but we just as much need what's going to happen in the next 10 years. Because if we first do it in the 30s or 40s, then we'll get an overshoot that we don't know how to actually deal with. So we need the private sector, the investors, the corporates, but also the public sector to set some realistic 2030 goals, but also say what's it going to do next year and the year after that. And because this is actually part of the difficult work, to find, to do the right planning and find the right investments and then go doing it. I hope that will be not at the COP, of course, but we will see that in the years to come, that now it really, we can see the new things coming up, the new models being launched and so on.
Yeah, I think that's a great way to end, because I think that is, I think captures, you know, much of what we need is, you know, not only ambition in these long-term goals, but a real commitment to action and meeting near-term targets to make sure that we're making the right investments, we're seeding the new models, we're helping to, you know, kind of create new markets that will then get to that global scale that we need by 2030. Well, Peter, unfortunately, we have to close for now, but I want to thank you for your time. And I also do want to just note that I hope we can continue to work together, because I think many of the things that you're working on with institutional investors, in climate, certainly connect with so many of the ways that we work at the GIN and with CDC and others around how to mobilize more capital for sustainable development and to help mitigate this, the systemic issue that we've all come together to help address as a community. So thank you for joining us.
Yeah, thank you very much also from me.
Well, great. And hopefully that's piqued everyone's interest. And now I'll turn it back over to you, Manley. Thank you.
Thanks very much, Amit. And what a fascinating conversation that was. I think they covered probably a lot of the issues that we're going to get into now in the panel. So I'm delighted to introduce the panelists for this session. Nijad Jamal is a partner at Equator, which is an early stage venture capital fund investing in technology-enabled ventures in the energy, agriculture, mobility sectors across sub-Saharan Africa. Krishna Kumar, I'm not sure if, yes, now we can see you, Krishna, great, is founder and CEO of Cropin, a leading agri-tech business that uses data and technology to improve yields for farmers across India and in Kenya and Nigeria. Alice Chappell is a Director Impact Value and among other roles is an advisor to GridWorks. Alice has worked in international development and impact investment for over 30 years. And last but not least, Jeff Manley, who is Head of Energy Access and Energy Efficiency at CDC and works closely with myself in implementing our climate agenda. So I'm actually going to start with you, Jeff, and ask you to tell us a bit about the work you're leading at CDC. Why does it matter? Where does it fit in with our mission at CDC?
Sure. Thanks so much, Amelie, and hi, everyone. So Jeff Manley, I head the Energy Access and Efficiency team at CDC. We provide debt solutions for distributed renewable energy and resource efficiency, and we're really trying to address two key development objectives. One of those is promoting energy access. There's still so many people that lack basic electricity, while also addressing the climate challenge, which is obviously why we're here. So in distributed renewable energy, or DRE, we provide support sort of across the solution set. At the small end, solar lanterns, solar home systems, which are really aimed at household level electrification, through to mini grids, which can serve residential and business customers, and then commercial and industrial solar, which is obviously targeting the business segment. And innovation, which is our theme here, has really been a key driver in DRE. One example of that would be solar home systems, which over the last decade has scaled into an industry that's estimated at 1.75 billion. And providing energy services to over 400 million people. And we need a lot more of that innovation. We need innovation in mini grids, for example, to really help that segment scale. We also invest in resource efficiency, and that for us includes both energy and water. This is really an exciting emerging area for us, but where we see opportunities to help address the climate challenge by reducing carbon and water intensity of production. And part of that excitement also is that, in addition to helping address climate, there are also real opportunities for businesses to reduce costs. So that's an exciting sort of win-win proposition. Because we tend to invest in nascent markets, we also engage at the sector level in what we call market shaping interventions, where we've been able to use our CDC Plus TA facility to help address the sort of broader market and move that in the right direction, which we think is a critical role to be playing. So the work of my team sits within a much broader strategy for our infrastructure and climate vertical at CDC, which includes other teams that offer debt and equity investment, both directly and through intermediaries. Some of the key elements of that strategy are continuing to support utility scale power generation and really promoting the transition to renewables. So, we have a very strong focus on renewables, including, some more innovative types of utility scale solar, or looking into storage. But we also want to more explicitly focus going forward on climate areas that we think are essential to address, for example, adaptation and resilience through urban infrastructure, water and sanitation, new technology areas like e-mobility. So these are all really exciting emerging areas that we want to increasingly focus on. And I think, for us to do that, and for organizations like CDC to be effective, I think intermediaries are really one of the key solutions to supporting, young companies in nascent markets. And there are a couple of ways that we can do that. One is that, we may create a new platform where we see a gap in the market. A great example of that is GridWorks, and I'm sure Alice will give us all the details on that. And we can also support fund managers that have, that kind of specialist expertise and the capability to invest in early stage companies that we can then help scale. And I think Cropin is a great example of that. So let me stop there and and hand it back to you,
Great.
Emily.
Thanks, Jeff. And yes, so you mentioned crop-in. So I'm going to turn now to you, Krishna. And tell us, if you could tell us a bit more about crop-in and your work, why you decided to focus on the agriculture sector and how innovation is core to your business strategy.
Sure. So, we started crop-in 10 years back. And since inception, we have been focused on solving the challenges of scaling and enabling this sustainable agriculture within this ecosystem. And we clearly saw the gap of technology which could solve some of the complex problems which exist in our crop value chain from farm to fork. And if you look at the headwinds are like if you compare the yields of different developing nation versus developed nation, or the impact of the changing climate, or the carbon which is increasing the temperature, and it is bringing the yield down by let's say 15 to 25%. And there are various other challenges, right, because of all these headwinds. And this is also, we felt an important challenge to solve as we prepare to provide food for 10 billion people by 2050. And prior to crop-in, I was working with GE, and I was part of their leadership program. And our job was to continuously look for technology and innovation and tools to bring efficiency and scale in various factories of GE, right? And when I correlate that to a farm, every farm is a factory. It has its own production and supply chain issues which need to be solved. And at that point of time, I didn't find any technology intervention which was solving for this, farmers and taking on these challenges head on. And that's what the genesis of crop-in. We thought we need a platform, we need a data-driven intervention to look at all these challenges and try to solve one by one. Over the years, crop-in has built a very robust and intelligent SaaS platform that today enables hundreds of organizations to manage their grower base. In 52 countries, we manage around 7 million farmers, 16 million acres of land. That means we are technically, influencing 20 billion worth of food production on our platform in these 52 countries. And these countries are, right from developing nations like Southeast Asia, India, where we started with, went to Africa. Now this technology we have taken to Latin, Europe, and US as well. So we built in India, and we saw that these challenges, the challenges which exist in agriculture, is not only pertaining to India, but it can scale. I mean, it can take to it also similar what the other farmers in different parts of the world are facing, and that's how we are able to scale this technology as well. Today, our team of data scientists and engineers are working on these crops. We have crop data from 52 countries on our platform, and we are trying to build the crop knowledge graph, which can light up intelligence on the cropping pattern and all the issues. Right from the understanding the causal of why the yields are low, what is the impact of climate on that. We are marrying technologies like satellite, weather, and any other data which is getting generated from those farms on our platform, and helping our customers to use that intelligence to improve the efficiency, and also support the farmers from to accelerate the smart advisories or practices which will help them to fight the climate change, and also monitor the carbon and other use cases to help to provide technology and support to change those practices which can fix the sequestration of the carbon on the soil. And in nutshell, crop-in has created an interconnected network of intelligence for all the stakeholders at different level of agri value chain. And our clients are now able to leverage technology to effectively drive transformation initiative around digitization, traceability, predictability, compliance, and sustainability around their crop value chain. And today, our effort is to accelerate this growth as fast as we can. How can we distribute faster and reach 100 million farmers in the next 2 to 3 years?
That's fascinating. And I know, I mean, I've talked about cropping myself on panels because it's one of the technologies and business solutions that is actually addressing the climate adaptation and resiliency needs that we know is so challenging. And in fact, as Peter said in the previous session, doesn't tend to have an income stream, but I think you are proof that that doesn't have to be the case. So it's great. Thank you very much, Krishna. So now I'm going to turn it over to Nijad to ask you about Equator and your fund.
Oh, thank you. Thank you so much for having me. And yeah, I'd like to just kind of give you a bit of an introduction. I think, as you sort of mentioned, Equator is raising a fund to invest in technology-enabled ventures that are solving key development challenges in energy, agriculture, and mobility, specifically in sub-Saharan Africa. And we are working in partnership with Factory Ventures, which is an early stage investor and venture builder, to ultimately invest in what we call kind of climate positive solutions in the region. Now we've seen and believe that there is a need to adopt new low carbon, energy efficient technologies and business model innovations that fundamentally can help mitigate future emissions, but also importantly to support adaptation and resilience to climate change in the region. This is something we were just mentioning or talking about. And I think it's sort of no secret that sub-Saharan Africa is characterized by rapidly growing populations, urbanizing populations, economies that are linked very much to kind of old fossil fueled infrastructure. And the result is clearly a looming growth in emissions, the highest projected rising rate of the highest projected rate of rising temperatures in the world. And what we've seen is really kind of interconnected climate related risks that are compounding to create a humanitarian crisis in the region. And if that's not bad enough, sub-Saharan Africa is the least prepared and the most exposed region to the adverse effects of climate change. And this has been kind of amplified by the impacts of the COVID-19 pandemic. And so despite all of that, the good news is that there are technologies and innovations that exist today which can help address some of these challenges and this crisis, and particularly in sectors like energy, agriculture, and mobility. And so we're seeing globally falling costs of data, falling costs of solar PV, falling costs of batteries and better battery technology and battery management systems, falling costs of other materials. And then at the same time, we're seeing greater access to finance, greater access to more innovative financing solutions, greater access to things like internet connectivity, for example, that kind of all combined is allowing for unprecedented development of clean technologies. And I think, unfortunately, or however, getting these technologies into the hands of businesses and into the hands of customers really requires a significant investment in innovation. And so on our end, we're sort of looking across energy, agriculture, and mobility. We're seeing innovation both on the technology side and the business model side. In agriculture, whether it's on kind of delivering inputs and higher quality assets that could improve agriculture yields, or innovations that are reducing post-harvest losses or providing better access to high value markets. On the energy side, we're spending a lot of time with transition technologies that can enable smarter distributed renewable energy systems, or things like tech-enabled energy as a service business models. On the mobility side, a lot of time is being spent obviously on electrification and digitization of the transport sector, both public and private, and both for people or for goods and services. So really, we've spent a lot of our careers investing in sustainability-focused ventures in the region. We've seen that there is a need for kind of active long-term investors in the space, investors that have deep technical and domain expertise, but then coupled with experience supporting companies and entrepreneurs in a more active way to achieve growth. And so at Equator, and with the support of Factory, one of our unique approaches is really to seek out global technologies and global innovations, and then to support their application and delivery in local markets, so that we can do our small part in addressing some of these pressing, I guess, climate and humanitarian challenges that we've been talking about. So I'll pause there and thank you for your time.
Thank you very much, Nijad, and really interesting. And I think Alice, you'll be familiar with a lot of what Nijad said, and Factor E, I think, in particular. So actually, Jeff mentioned GridWorks, which is a great example of an innovative business model that has been set up to address the dual challenges of energy access as well as more sustainable energy. Can you tell us a little bit more about the approach and the other challenges that you think could adopt such an innovative business model?
Yes, thanks, Emily. So as many of you will know, CDC set up GridWorks, and Jeff and Emily mentioned it, to address the challenge of access to clean energy across the continent. And our mandate is to invest in both off-grid and on-grid solutions. And I think the innovation probably comes at two levels. One is around the original structure, as you mentioned, Emily, about setting it up as an independent company. It gives it more focus, it gives it more ability perhaps to take a longer term view, or it gives a particular emphasis on the sort of entrepreneurial nature of some of the activities that we can do, and in the way that we can engage with host governments and other donors. So a really interesting innovative structure, as you say, that business model in the first place. And then I think at another level, the innovations around those particular interventions that we can make. So everybody is aware that now it's not all just about generation. It's about how do we have mini grids that can work off grid, that so sort of separate from the grid. How can we encourage better transmission networks? We have the generation. How can we find better ways to transmit that energy? How can we look at different ways to make the grid more reliable so that it can allow more renewable resources to be on the grid? Many of those grids are too unreliable at the moment to be able to take as much renewables as we would like. So many of those interventions, which are what GridWorks is focusing on, are about innovative solutions which all have climate and access solutions. So I think at that level also it's really important to note the innovations in each of those different areas. And one example, as some of you will be familiar, is Moi Power, which is a mini grid concession in the DRC and Democratic Republic of Congo, where the government has given GridWorks that concession, or a Moi Power more correctly, because it's a consortium involving GridWorks. But it's a new way in which it's got scale, which is something which hasn't been the case with several mini grids before. It's also engaging with the regulatory underpinnings much more than perhaps others have been able to do. And so those kinds of models are replicable, and we think that those innovations will enable more access to energy solutions, but also climate solutions. And I think if we're going to scale that approach and map it onto others, there's something about the way that GridWorks engages with host governments, with donor governments, in partnership with the private sector. That's clearly a model that is needing to be developed further in terms of how we can replicate some of these approaches. And there's also, I think, that piece about how can we support the regulatory environment to drive more investments in both climate solutions and access to energy, which I think is also a big part of the GridWorks model. So if you're talking about similar approaches, and all of those are relevant, whether it's enabling environment for electric vehicles, enabling environment for digital technologies, the sort of thing that Nijad is working on, enabling environment for the agricultural solutions that Krishna was talking about. So I think very, very important innovations and replication.
Thank you very much, Alice. And I think, you bring up really interesting point that it's not just about the technology or the finance, but also the policy and regulatory context is key. Something that Amit and Peter talked about as well. So I'm going to come back to panelists. I'm going to start this time with you, Nijad, to ask, what do you see now as some of the biggest challenges in being able to invest in these types of innovative business solutions?
So there's probably a long list of challenges. I will attempt to maybe just touch on two that I think are worth mentioning. So I think one of the challenges in in the space currently and sort of attracting investment into kind of early stage or sort of highly innovative solutions in emerging markets is to do with an investor mismatch. Global clean technology investors who have deep domain and technical expertise are still, unfortunately, nervous about investing in many frontier markets. And Peter touched on this earlier. You see that these investors, they struggle with the markets feel foreign. They struggle with macro risk, regulatory risk, political risk. They're hard to understand or assess when you're sitting, for example, in Silicon Valley. And then at the same time, you have many local or regional investors who just don't have the technical depth to help deliver the types of solutions and innovations that are really required in these markets. And clean tech and climate investment is still fundamentally an emerging field. And so I think one of the challenges is in bridging these two worlds, in how you encourage more collaboration to ultimately drive investment both into the region, but also into relatively technical sectors. And I guess the second challenge that I'd probably mention is one about there being a real ambiguous path to scale for many ventures in the space. And that comes, sorry, that comes largely from the capital side of the industry. So the nature of investing in climate innovation involves investing in both digital and physical technologies and infrastructure. And so that means that the path to scale can often be capital intensive. It means it requires kind of this combination of equity and debt. It often requires a combination of early stage risk capital, but also later stage growth capital. It often requires a combination of commercial sort of funding, but also incubators and accelerators, foundations who can come in and provide grant funding or non-dilutive funding. And unfortunately today, one of the main challenges is that this funding ecosystem is a bit disjointed, which means that the path to scale for ventures and for entrepreneurs is less clear and less certain, and often makes that then, sort of a cycle where it becomes harder to mobilize capital.
Thank you very much, Nijad. And yeah, I'd like to come on to you, Krishna, because I think this is clearly a critical issue. How do we improve the funding ecosystem? How do we make it, easier for different sources of capital, different types of funding, including, as was mentioned critically, the sort of incubation acceleration, which is something we're definitely seeing as we're looking to invest more in adaptation and resilience businesses like Cropin. Could you tell us, how you see this from your perspective, and how have you been able to access different types of finance, and what that's been, how that's supported you to get to where you are?
Sure. So, when we started, we did have the ecosystem where we found a lot of impact investor coming to looking at agriculture. And I don't think that time even the AgTech term was coined, right? It was very recently, maybe 3-4 years back, people started talking about AgTech. And when we, and almost I approached a lot of people when I started this journey for investment. And as Nishad mentioned, right, they don't understand the agriculture business, the mainstream investors and the risk involved, and they don't want to underwrite such risk, right? And they have a much better space to invest because they understand those businesses and they've seen those businesses scaling up in different parts of the world. But we were quite lucky, after 8 months of inception, we got our first angel investment, and we were able to raise the fund because we had the scalable business, and we got our customer, in 6 to 8 months, and then we were able to see show the repeats. So I think in order to attract, any fund, whether it's an impact or a mainstream fund, you have to go after the problem statement, which is scalable, and people are ready to pay for it, and the business is sustainable. And if you're able to show that, I think there are, you will able to, we were able to attract impact investor in initial days like Ankur Capital or Investor Development from US, and then, Bill and Melinda Gates came and did the equity investment in Series B round. And in a CDC also, we saw participation from CDC and then ABC World Asia, which is one of the investing arm of Temasek. And we saw, and today I don't see the dearth of capital. I see even the mainstream investors are ready to write a check, but they want to see the metrics. They are not going to compromise on your growth metrics. You have to show those growth. And if you have that, you were able to attract those capitals as well. So I think this industry should take a little, impact investors should come forward and provide a growth capital as well, because they understand this space much better alongside with these mainstream investors. And it's required a patient capital, because you are solving a problem which has an impact on almost every person on this planet. We are talking about every fourth person, is a farmer on this planet. And this climate change and the impact of it has a direct correlation to our health and the food, right? We are having food every day, and we are solving for that. And these are irreversible changes. If we are not going to take care of this, and we want to double the food production, do we want to double the emissions, like the methane, which is 45% comes from the contribution comes from the agriculture, and nitrous oxide, which is 80%. And these are much more powerful emissions than CO2, which is going to contribute towards the global warming, which has a very adverse effect on the agriculture. And if we don't solve for this, I think we have a bigger problem going forward. And I think people can relate to this, but it requires capital. It requires a lot of people from different sectors to jump in and solve for it. We need more of a top talent, machine learning and AI people coming and looking at how do we solve this global problem. And I think investment is going to go in that direction. And we see that change. Today, we are able to attract people from likes of Google, Amazon, who are coming, and they're happy to come and see. We didn't know these challenges exist, right? Because they are never exposed to these kind of challenges, but they are now very happy solving this, because there is now impact of the work which we are doing. Yeah.
Thank you very much, Christian. No, really, really interesting. So maybe I'll come to you now, Jeff, on this question then. How are we seeing it from CDC's perspective, these points that Krishna was making?
So, I think in a lot of ways, and maybe touching on some of the points that Nijad raised as well, is that, in terms of supporting climate innovation, DFIs are not always in a great place to do that. We often struggle to invest in sort of smaller early stage companies. We have issues with risk appetite, and also just sort of the way that we execute. So I think there are a couple of ways that we can help. One is that we can explicitly try to take on more risk, and I think one of the really exciting things that we've benefited from at CDC over the past few years is the creation of our Catalyst investment strategy, which allows us to take on more risk. And we've used that sort of capital to invest in DRE. A lot of the investments that my team makes are using that Catalyst capital, GridWorks, et cetera. So, that's sort of an explicit initiative to take on some more of that risk where we see opportunities for enhanced development impact. And I think, hopefully we won't stop there. I think we're actively exploring opportunities to further expand our toolkit in partnership with others. Amit mentioned in the interview blended finance. I think that's an approach that can be really useful in fostering more investment in climate innovation. So using different forms of capital depending on people's varying levels of risk appetite and combining those together in a more coherent way. And then I think also just the point again around intermediaries. So there are specialist teams that we can support. We, for example, again, with Cropin, we can start to develop a relationship and start to provide some capital through a specialist intermediary that, can fund those early stage equity rounds. We can then look at co-investment opportunities in the later rounds. It can then transition, to larger amounts of capital from CDC, and then hopefully, becoming fully commercialized. So I think we need to, look at solutions where we can follow companies along in the life cycle and support them with the different types of capital that are needed.
Great, thanks very much, Jeff. So Alice, coming back to you. So obviously you talked about GridWorks as a innovative intermediary that actually CDC created and built. You also touched on the policy and regulatory side of the ecosystem. I'm wondering, maybe could you expand a little bit more on that, and what do you think is really, really needed now? What role can governments play to really accelerate the innovative climate solutions?
Well, thank you. And I think it touches on all the points that everybody's made. I think that throughout the investment ecosystem, support is needed from governments, isn't it? So early on, we need that technical assistance. We need a recognition that subsidy is sometimes required in some of these early stage activities. And governments obviously can play a big role in that, and whether that's through organizations like the DFIs, or whether it's setting up the systems. For example, the concession in the DRC was very much work that was done by the UK government early on. Secondly, I think obviously there's more work that can be done in working on understanding where industrial strategies or industrial policies or incentive structures are needed within countries and even globally to really target those types of investments. Where is that support needed in particular countries, but across different types of industry and so on. And that's clearly a role for government. And then I think in the investment space, and I know this is particularly for this panel, we are talking about how we get the entrepreneurial piece in, but I think there's a role for somehow aggregating, and I think government has a role in this, aggregating some of the entrepreneurial activities into investment vehicles that can then be enabled to be accessed by some institutional investors. And that's because perhaps by using a guarantee alongside those aggregated vehicles, somehow I think that governments can play a role in de-risking some of those potential investments that investors know they should be making, because they eventually will reduce their risk to climate change overall, and they know that those innovations are needed, but they have no way at the moment to invest in those innovations because they don't have the structures, they don't have the vehicles to do that. So the role of governments and it's mentioned in the terms of blended finance to particular projects, but I think also guarantees to vehicles to fund structures. And just very quickly, Emily, one of the organizations I work with is a listed company which packages up some deep impact investments. It's called Schroders BSC Social Impact Trust, but enables those deep impacts to then be listed on the UK Stock Exchange. So I'm a director of that organization, which seems to me to be a sort of model that governments can help to support more, and that could be an important place to explore how you encourage more investment into the space.
Hello, can you hear me?
We can.
Sorry about that. I was having a few technical issues over here, so had to switch off my laptop onto a phone. So, but hopefully all is okay. I think now, we've covered a lot of ground. So, and I know there's been some really interesting questions coming in from the audience. So I think now if we'll turn to the Q&A session, and please, for anyone else that would like to ask a question, please do submit via the Q&A function. So the first question, which I think is a really interesting one, and I think goes back to the question, some of the points that have been made just now, but also the point that we heard from Peter in his discussion with Amit earlier. So this issue of reporting and the need to be able to report on data or have the right kind of data to report on impact. and maybe sometimes some of the tensions that might then exist between sort of impact and economic return, potential mismatch there. So question has come through is from as a fund manager who is aspiring to focus on green energy, who would be best to engage with on the trends and way of reporting to ensure that investors' needs with regards to data and reporting on impact is provided. So I think maybe just turn to maybe each of you to respond to that question, and I'll be coming forward with another question. So if you prefer not to get into a lot of detail, please just let me know, because there are more questions coming through.
So in terms of measurement for green energy, I mean, I think that net zero gives us a really interesting framework, but in the developing countries, in the emerging markets where we're working, it's actually about how do you grow with a limited amount of carbon intensity, rather than necessarily always being about how do you reduce the carbon emissions. And I think that's a critical point which we need to engage with investors on, around the sorts of intervention that we're doing, and energy efficiency, as well as carbon reduction, is largely around that. Clearly we want to measure carbon emissions, but we're also seeing, is it a low carbon opportunity? Is it a low carbon option for that particular activity? So I'm sure Krishna and Nijad would have other thoughts about how they're measuring that green piece within their portfolios or within their company. But I think that's a sort of framing point that I wanted to make. And Jeff, I'm sure over your portfolios as well, you have to report on that. But it feels to me that understanding the slightly different dynamics in the developing countries where we're working is a crucial first step.
No, I mean, I think that's exactly right. In terms of, in terms of frameworks, there are organizations like CDC have actually done a lot of work in helping to develop, ESG and impact related frameworks. And I think in many ways work with fund managers and with ventures to kind of implement a little bit of a cohesive or coherent similar system kind of across funds, which makes it a lot easier to kind of compare and to track, and you're not then burdening companies with having different ad hoc metrics. Organizations like the GIN or kind of IRIS, in terms of the actual kind of metrics that are being calculated or reported on, provide some consistency as well. But I think from the excuse me, from the fund manager perspective, we try not to lead our investment kind of policy by saying, let's optimize for a specific, maximize a specific impact metric. I think it ends up being more about leading with a thesis about where you think the world is going, how you think sectors can evolve, the impact that you can have, and then you use metrics to help support and track that, as opposed to solely trying to optimize for lives impacted or CO2 emissions reduced or whatever it may be, because that would then direct investment into sort of very narrow sort of areas.
Yeah, so we have been part of this World Economic Forum, where there is a public and private partnership, and we are one of the technology providers, and we are working on this, on the goal of making Europe farming carbon neutral, right? And this whole forum is about building those frameworks, monitoring frameworks, and then how you're going to implement and impact to achieve the goal of being carbon neutral across Europe by 2030. And from the tech point of view, we are building models to look at how the nitrogen is, what is the nitrogen uptake of the farm, right? So if you look at these emissions like nitrous oxide, which is 80% comes from the agriculture and farming, when you apply nitrogen fertilizers in the soil, if you are able to optimize that by providing the smart advisories to them, or if you are able to monitor the deforestation, which is then happening due to the farmers who are encroaching the forest, and then what is the impact it has on those areas. we see a lot of pests and diseases are occurring just because of the climate change. And can you predict that? And can you monitor why this is happening? If the sowing windows are changing, it has a direct correlation to the yield. And how do you, how do you tackle that through the better advisories? There are climate advisories like flood and extreme climate, where you need to build the climate resilience working alongside with the farmer to help them adopt the practices which will help them to fight the climate change. And we are talking about, if you are trying to give him a drought resistant seed, and if you don't tell him how to use it, this whole effort goes down. So I think there are various frameworks and monitoring capabilities as a crop we are working on, and there are various other people are working on, but it has to be accepted by the industry, right? So this is how you monitor, this is how you impact going forward, and we are very happy to be part of that coalition to see what impact we can bring there.
Thank you very much, Krishna. So, and in fact, you brought up a really interesting point, that one of the questions that has come through around forests, the interlinkages between deforestation and agriculture. So I'm going to come back to that. But Jeff, would you like to give your views on the question that came from the farm manager?
Yeah, I think I would echo some of the things that Nijad said. I think if you look on the CDC website, there are quite a few resources around, how we look at environmental and social management and development impact from sort of a policy perspective, but also different case studies. We came out with a series that we call Impact Game Changers that I think, would give a pretty good sense of, some of the development themes that we're most interested in. We're going to be implementing, we very, comprehensively assess the impact, both ex ante and ex post of our investments. We're going to be implementing a new development impact framework going forward that focuses on 3 pillars. One of those is sustainability, which would capture indicators around climate, for example, avoided CO2 emissions. Another pillar is inclusivity. So that would be looking at things like the extent to which business is able to touch base of the pyramid customers or address gender. And then the third is productivity, which would be things, around job creation and growth. So, that's just gives a bit of a sense of kind of the KPIs and the key themes that we're most interested in from a development impact perspective.
One of the questions that had come through was about the drivers for deforestation that can result from the agriculture sector, and a question as to what would be some of the innovations, particularly for smallholder farmers, that could help reduce drivers for deforestation. So I'll start with you, Krishna, because obviously this is an area you're very active in, and then return to Nijad before coming back to Jeff and Alice.
Yeah, sure. So I think, so what technology can do from the cropping perspective, they can monitor what is the, how much deforestation happening because of agriculture, how sustainable, and how it is impacting to the sustainability. To give you an example, when you look at Southeast Asia, where the palm, that's a big market for the palm, and they do sometimes they do the deforestation, and the area is quite swampy, and they put the palm plantation there, and that generates methane emission happens. And then the whole, and there's a question on the sustainability. Do we need to go and buy from that? Can we monitor that? Can we encourage the farmer that if we are going to do this, the buyers are not going to buy, because there is now traceability, there is now monitoring of deforestation is happening, and in order to export those crops will be difficult. And these are some of the problem statements we saw coming from there. We were working with some of the clients in Africa, and they said it's very difficult to predict because farmers keep changing their location. They'll go and do the farming at a different location for various regions. And in that case, they have to do the deforestation as well, because that's a new area and they have to do the plantation there. But this is not only the cause. We were looking at Nigeria for wheat. We were running the models on wheat to detect which farms are doing wheat in Nigeria for one of our major clients. And we this season, and this is a recent result, that one of the states, which is Borno, is going to produce half of the wheat than what it is the largest wheat producing state, and the Nigeria depends on the wheat a lot. And now they're not going to do that because the farmer has shifted the base because of the insurgency happening in that area. Now, when they go to the new area, they're going to do the deforestation because they need a farm where they can create their livelihood. So there are many challenges, and it has to be addressed at various levels. Technology can help you see through that and assess the impact, and but the livelihood challenges need to be solved, and the farmer need to be trained and show them that why they should not be doing this and what is the alternative to the deforestation. And that's a much bigger question to answer.
Thank you. Yes, a lot of big questions, but a lot of good solutions that we're hearing about. So maybe Nishad, maybe from your perspective, what you're looking to invest in agricultural, innovative technologies and businesses.
No, exactly. I mean, I think Krishna touched on a lot of key points. In many ways, the focus on deforestation, there's almost the indirect solution is to actually focus on smallholder farmers and to figure out how you improve their livelihoods, their efficiency, their yields, reduce their risks. And so if you are now investing in models that are helping to provide more innovative delivery mechanisms to get adapted seeds into the hands of smallholder farmers, what does that then mean for their ability to be more resilient to some of the impacts of climate change? Or if you can invest in models that are providing smallholder farmers with more efficient drip irrigation technologies, for example, what does that then mean for them? Or if you can help think about providing investing in technology platforms that are providing microinsurance to smallholder farmers, or using satellite imagery to provide parametric insurance to smallholder farmers without them actually having to submit a claim, and they just sort of automatically have these benefits. All of these things are somehow, in a way, creating stability of income, stability of yields for them, reducing some of their costs, providing better access to markets and higher value kind of markets. And ultimately, I think that then has the knock-on effects that we're talking about, even if it's not about necessarily cutting down a tree or replanting a tree, for example.
Great, thank you. And actually, and so you mentioned drip irrigation and water, improving water productivity. So Jeff, that's a very good segue to you, I think, and some of the investments that we've been making in that area. So maybe just if you could briefly give an overview of how you're seeing this.
A lot of good points have been made already. I think, from my sort of off-grid perspective, we see a lot of really exciting opportunities to help African smallholder farmers move from a more extensive model to a more intensive one by using solar to provide irrigation. Some really interesting things happening around solar cold chain to help reduce post-harvest losses, as well as processing. So I think to the extent that you can help smallholder farmers through decentralized solutions to reduce post-harvest losses and increase yields, that is going to reduce pressure to expand farms and perhaps engage in deforestation to compensate for sort of low agricultural productivity.
Yeah, absolutely. And of course, actually ensuring more sustainable energy is also a good way of reducing the drivers on deforestation and the use of obviously charcoal or unsustainable use of forestry. So Alice, is there anything you'd like to add on this point before I come back to the final question for
I think most things have been added. I think the only thing would be clearly that connection between energy and productive use, so that trying to tie in how those innovative solutions on energy can be directly related to how those smallholders are able, because we find that energy is difficult to put in because people can't afford it. And how do you connect up those energy providers with that productive use in a very holistic way, I think is an important innovative model that is going to drive a lot more, enable a lot more investment in that space, I think. And then the only other thing is around payment for ecosystem services we've been hoping for a very long time. I don't think we're going to see that being a solid market, but I think that's a growing area that we all ought to be thinking about as a potential other source of income for smallholder farmers in the longer term, particularly people who are forest people who live and rely on those forests.
Yeah, no, thanks, Alice. And I think whilst I mean, yes, payment for ecosystems, but I think there is a huge focus now on nature-based solutions, which is maybe a different name for ecosystem services, and a lot of innovation coming through there. But unfortunately, we don't have time to get into that in great detail now. So I'd like to ask just one last question to each of you. So 3 weeks actually today, world leaders will be gathering in Glasgow at the beginning of the COP26 summit. So if you had one wish or one request, what would be your call to world leaders at COP26? What would you like to see?
I think one of the requests I'll have, and a wish I will have, is look at agriculture more seriously, because it has a larger impact from the climate point of view. But at the same time, also find a means and a way to accelerate financing and the risk coverage for this smallholder, because you can give the best of the best advice to control the carbon at the farm, but if they are not able to implement because they don't have a capital or to implement, it's not going to work. And no financial institution wants to really touch farmers to give a loan because they don't understand the risk. But today, technologies are available to help you bring down your cost of monitoring and understanding the risk better on these crops, and it could be a much more viable business for them. So how do we come together and solve for this for the smallholder and accelerate this financing in this sector?
Thank you. Okay, now to you, Alice.
I guess my rather sort of glib one, apart from the obvious glib one about put your money where your mouth is, but the obvious glib one is about just communicating honestly about the difficulties that we have, and that it isn't up to the governments only to find the solutions. We all have to be part of that solution, but communicating honestly about the political choices that are going to need to be made, and the difficult investment choices also. So I think we haven't got enough of that sort of honesty at the moment around what we need to be engaging with, and I think that there's more of that required.
Okay, Jeff, what is your call to world leaders?
So I would call for more holistic and coordinated energy system planning that really incorporates DRE solutions into the overall picture. I think that DRE is the least cost solution for electrifying a lot of people that currently lack electricity, and in a way that is compatible with climate. But all too often, sort of national level energy planning doesn't take that into account, and you're left with, utilities that may be distrustful of, DRE developers. And so there's a missed opportunity there, and there is a lack of policy support. And so I think, if national leaders can really see DRE as part of their national electrification strategies alongside the grid, putting in place the policy frameworks to support that, that will be a huge step forward.
Right, so distributed and renewable energy.
Yes.
Yes, and Nijad, finally, what's your call to leaders?
Yeah, so I mean, I think what we've realized is that what we've been talking about as a climate crisis is in many ways in our markets a humanitarian crisis that impacts jobs, incomes, livelihoods. And it is one that no longer can only DFIs and development finance and impact investors address alone. So my call to action, I guess, would be for governments and public institutions to do everything that they can to help mobilize private capital, which ultimately is where we're going to get to scale and where hopefully we can mobilize higher risk, earlier stage funding to come in so we can, and investors like us can continue to invest in critical technologies and innovations in these markets.
So, well, thank you to each of you for a really fascinating and very in-depth, very insightful panel discussion. I think obviously it's clear that innovation has a critical role to play in tackling the climate crisis. And that's innovation in technologies, particularly the more high-tech end, as we heard about today, as well as also innovation in business models, as well as innovation in how we finance those, as well as innovation actually also in policy and regulation, which I think was something that all of you are asking world leaders to come forward with. And, you know, going back to Amit's point at the very beginning, as he mentioned, we need a systemic crisis needs systemic solutions. And I think, you know, based on the discussion we just had, we know it also needs a whole of financial system approach, in particular, the points that were made that different forms of capital are needed, as well as also those that can bring maybe grant funding for that very, very early sort of incubation of new ideas into innovative opportunities, and ensure that the system, if you like, the financial system is able to help channel, accelerate those and grow and scale to the point where Peter and institutional investors can also start to put their capital into these types of business solutions. So really like to thank you all once more for joining, and hope the audience enjoyed this, and I do apologize for the slight technical issues that have taken place today, but hopefully we found an innovative way to manage this panel. So thank you very much.